Welcome everyone back to Pete's Investing Updates. In this special edition, I'll be covering two topics. Firstly, a quick overview of the charts of some Forex pairs to trade and looking at their profitability, drawdown requirements and margin requirements. Secondly, we discuss the broker costs involved, such as interest, margin requirements and other holding costs, and our preferences to invest elsewhere. First, always don't forget to review the playlists on our channel. That's where we review the indexes, some share prices, and a strategy page, which we cover in the simple trading strategy, the average down process, and some money management ideas. As always, don't forget to click on a subscribe button as well as a notification bell and like this video to support the channel. And if you want me to review an index, a share, a commodity, or a Forex pair, put it in the comments and I'll cover it in a future video. So let's get started. First, let's look at the pairs we'll be looking at. We're looking at these Forex pairs, and this just shows the margin requirements, the profitability. This happens over a 5-month, 15-minute chart, and we're trading one contract, and the drawdown requirements of that. So over the 5 months, it just calculates out since the starting date, and today's date's the 30th of June, 2021. It just shows the profitability. Now, these profitability numbers are in different currencies, so we just summarize the total number at the bottom there. You can always look at that and convert it to your own currency should you wish. So let's first look at the Aussie-US currency pair. As you can see here, we are trading here on the simple trading strategy based on our approach. And that's where we take the average down approach. So in this case, just looking at this little section here, where it's a one step, we enter the trade there. The price fluctuated a bit, then it closed out there, and the closing criteria is identified by, it needs to be in a profitable state. It won't close out if it's not in a profitable state. And secondly, the CCI 100 needs to break below the zero, and that's what it's done there. So when the CCI is broken below the zero, it's already in a profitable state from our beginning. That's why it's closed out in that little trade there. And that little trade there returned 70 points for one contract. So if one contract equals $1, let's say, it returns $70 approximately for our little trade, barring any holding costs. And that was over a number of days, as you can see there, from late April to mid to early May. So looking at the long-term or the 5-month period, you can also see here it had average down approach in this point here, and also another average down here as well. And this is still open. It's a live trade as we speak. So that's accumulated 3 contracts since that point there. Next, we look at the Euro-US. As you can see here, it accumulated average down 3 times, 3 contracts in this point. As you can see, the price lowered. Please refer to our strategy playlist to understand how this entry works, how these entries work. Before it closed out here, then had multiple single entries there, and another multiple entry entered here. This trade still in progress. Next, we look at the US Swiss franc. You can see here, this is still in progress. Multiple trades, multiple entries made with contracts here. And the drawdown requirements, as you can see here, was 11.49 from that high there to that low there. And it's appreciated since then. So we're still in a trade and it's moving in a positive direction. Lastly, let's look at the US Japanese yen. And very similarly had single contract entries, single trades, and the only multiple average down that happened was in this period here. It entered in 2 extra contracts. After it met our criteria to enter multiple contracts, then it closed out there with a nice little profit, nice little return. So again, every time it closes out, our strategy must include to be a profitable trade, and secondly, it needs to break below the CCI 100 stage. So if you look at the we drill down on this little trade here, you can see here it entered the trade there because our CCI 100 broke above zero. The price appreciated. It didn't close out there even though it was profitable because our CCI was still above zero. Kept going, rose up there, and then it finally broke below, the CCI broke below zero there. That was above our profitability stage, and it closed out. Again, refer to our playlist strategy video to better understand how we enter and exit these trades, including the average down process. So again, this assumes we're making all these profitabilities we're looking at here at this point. This assumes straight trade returns in these particular currencies. In other words, we're not considering any brokerage costs. The margin requirements are simply margins. They're not actual costs, but they actually come out of your account and traded. So if you're trading one contract in each of these cases, it's going to use these respective amounts every time you enter a trade. So if you've got $10,000 in your account and you enter the Aussie US trade, it's going to come down $333, assuming you're trading with the same broker that I'm using. So you need to check with your broking account, see what margin requirements are when you're trading these CFDs. So remember, this video series is called Pete's Investing. It's not Pete's trading or speculating. The approach is to take a safe and minimal risk approach in investments we take, using probability from statistics to our advantage. The preference is not to trade Forex unless you have the funds and the risk appetite to do so, but instead buying and investing in blue chip shares. Refer to our simple trading strategy for blue chip investing videos from the playlist. You will note I don't use stop losses in my trading strategy. This is deliberate. I'll cover the pros and cons in general, the ineffectiveness of using stop losses generally, and when you should use the stop losses, and I'll cover them in a future video. So I hope that's shared some light in terms of our approach. Hit the subscribe button, the like button, the notification bell, and also don't forget to review our channel playlists, and especially the strategies we use. And we'll see you in a future video. Thanks for watching.